Welcome to a special episode of Contrarian Corner. I'm Ben Kellerin. Today we have two very special guests on to talk with us about an interesting situation and in the tin market and first tin and the investment case there. But I think it'll be a pretty interesting look with people that are very familiar with the company and have an interesting background. Just to lead off and be clear, we all have a position in first tin. Mine's obviously a lot smaller than theirs, but it'll be good to hear their point of view on kind of the whole situation, why tin is a compelling investment story today, and why there's, I think, more upside to be had in a case like first tin. But we have Albert Collette and Sara, also known as Triple S Situations. If you're not familiar with her, you should definitely go and check out her work. But guys, thanks for coming on.
Thank you for having us.
Yeah, thank you for having us.
Yeah, so I figured we could maybe start with Sara, get a little bit of quick background as far as your situation, career experience, how you got involved with First 10. Doesn't have to be anything elaborate, but I think readers would like to hear a little bit about your background.
Yeah, sure. I'm a professional engineer. I'm both a geologist and an engineer. I've been investing in the oil markets my whole life and also in various stock markets. I specialize in weird situations. That's what I write about on my Substack. If you haven't read it, you can read it. It's definitely pretty weird. The stuff I like to do. In regards to First 10, because of my geology background, I'm very interested in mining. I invest in a lot of mining companies. I like to get in early stage. And I believe tin is a very understood mining story. And I got introduced it by this gentleman who we also have on this call. He got me interested in it. And after I dug in more and more, I got very convicted on, one, the story of tin, but also the way to play it, in my opinion, which is first tin.
Yeah, no, it's definitely interesting because I've looked at other stories in the sector, owned Alphamin for a tiny cup of coffee, I guess, for a couple months at a time. But it's definitely an interesting setup for first tin here if they can execute. So, Albert, if you could give listeners your background and kind of how you're involved or have been involved in the past and all that, I think definitely people would be interested to hear that.
Sure. I'm also an engineer, and I've been in international finance for 30 years, worked 10 years at JP Morgan, and I've been involved in natural resources for 10, 15 years as well. And I'm a big fan of Sara's Substack. So thank you for the introduction. My involvement with First In, so Mark Thompson, who started the company, introduced me to First In like a decade ago, and I try to also I was involved, and I try to help the company as well. So I know this company, the history of the company for a decade, and what drove me to First In is the tin situation, because the tin situation is very, very interesting. It's very, very unique. I think people talk about silver, people talk about copper, but I think the tin situation is even more interesting. So it's really tin that took me into First In. And now I believe First In is really one position that if people invest in natural resources, it's really one stock they should definitely consider.
Yeah, so as far as your involvement, like Sara had mentioned that you were on the board in the past, like yes. How did you get connected with the company, and how did that relationship evolve?
So Mark Thompson was running a hedge fund with Trafigura, and I was an investor in his fund. And later he did a wonderful trade in the zinc business, and he left Trafigura, and he wanted to replicate that trade in the tin. And because we knew each other, he contacted me, we spoke about it, he convinced me, and I did some due diligence on the fundamentals of tin and so forth. And the idea was that there had not been any investment basically to produce tin. And I can explain why. For 15 years, there was no investment in tin exploration. And we realized that soon or late there will be a massive shortage of tin, and there would be only one or two or three tin mines that could be brought into production. Mark's strategy was to try to acquire those deposits that were more or less worth less because nobody was interested in tin. And so that's why we acquired Tellerhäuser in Germany, because it's one of the most promising, one of the 3 or 4 tin deposits that will become a mine in the future. So that's how I got involved, and I became a non-executive director. And then I resigned before the company was listed. So yeah, I've known the company for a long time. I know the management really well. And what is remarkable with First Tin is that it's a junior company, but the management has always been first class. Very, very good, experienced, talented individuals. For instance, the geologist, Tony Truelove, I mean, he's one of the rare geologists that was involved in tin when tin was still considered by the major. Before 1985. It's very difficult to find a tin geologist these days because they need to be of a certain age.
Yeah, he's been around the block a couple times, it sounds
yeah,
like.
yes.
Yeah, I think that's the perfect lead-in to kind of the high-level story before we actually get to company specifics and the actual assets. I think a lot of listeners would be interested to hear kind of your outlook for the tin markets, I guess both your outlooks for the tin market, like why the supply and demand, like looking forward, is so imbalanced. And a couple of people that I've talked to have been on top of this for a while. And we had a bit of a blow off top in the tin price where it went vertical into kind of 2022. And now we're just starting to run to that area again. And I guess let's start with like the supply and demand picture, why you think tin investment ideas right now are compelling, and kind of go from there.
Yes, very good. I mean, I think it's very important to understand the story. I mean, the story of tin. If you want to understand where we are now and where we're heading, I think it's very important to understand what took us here. Okay, so if you don't mind, I'll give you a little bit of a history lesson about tin. So tin is definitely critical in the defense industry, and after the Second World War, tin was highly regulated, and it was a market where governments were trading between each other. And then in 1956, they decided to organize the trading of the tin metal, and to make sure that the volatility of the price would go away. So they created, so all the nations that were producing and the nations that were consuming, they funded an organization called the International Tin Council, ITC. So its mission was very simple: keep the tin price very stable. Okay, so like the usual, like the OPEC now, when tin price is too high, you sell. When tin price is too low, you buy. Okay, so the problem with these organizations that try to control the price is that they lose track of what the clearing price is. So by the late 70s, they had kept the price a bit too high, and they accumulated between 50 and 60,000 tons of tin. So it was 1 year of consumption. Okay. What you get to remember as well is at the same time, because tin is very rare, it doesn't appear everywhere. There are only some regions in the world where you can find tin. At that time, the Soviet Union had no source of tin. Okay, and tin is critical in defense. So what happened is the Americans decided to basically buy all the tin that was available in the market, and they really bought a lot of tin. At the same time, Stalin decided to send an army of geologists to Siberia and said, don't come back until you find some tin. And in 1980, Russia found tin in Siberia, and the US defense decided to liquidate in a ruthless way the big stock. They had accumulated 4 to 5 years of tin production. So on the one hand, you had the ITC with 1 year of production, and you have the US defense with 4 to 5 years. Okay, both of them in front of each other. So the US started to liquidate, put pressure on on the ITC, and then in 1985 the ITC collapsed. They borrowed as much as they could, and the banks canceled the credit line. So the liquidation of the two stockpiles of tin started, and it lasted from 1985 basically to 2002. And the story is not so much the 1985 when the International Tin Council blew off, and it created 1 billion of losses for banks, and £1 million in 1985 was a lot of money. But what happened is that all the majors left the industry. We lost the knowledge because we stopped exploring. There was no money, and what we created that was even worse is that consumer got used to the idea that you can get tin even if the demand is higher than the supply. And from 2002 onwards, the price of tin has started to recover, but still no real investment. Okay, we lived off the old mines, we lived off the stocks, and now in early 2026, you have Macquarie, the Australian investment bank, that believe that all tin stocks will be depleted by 2027. And at the moment, demand is higher than supply. And there's no supply coming, absolutely no supply, because there has been no capex, there has been no money, there has been no new discovery. And politicians usually have this idea that it can just pass a law and next week we produce, I mean, it's not gonna happen like this. It's gonna take years to get lots of those mines into production. And as I always say, it takes 9 months to make a baby, but if you marry 9 women, you don't get a baby in 1 month. Some of the tasks need to be done one after the other. And this is what's happening in the tin business. So the demand supply is unbalanced, more demand than supply. And the problem is there's no supply coming. First Tin is the next tin mine that will be producing, okay? At the same time, we have this natural resources nationalism, and it's going to be more and more difficult to source tin from some countries that will prefer to sell to China or sell to another counterparty. And at the same time, so it's a perfect storm, you have the electrification of the world. So an EV requires 3 times more tin than a traditional car. You have solar panels, they need tin. You have data centers. An average data center require 1 ton of tin. So the beta, so the variation of demand of tin versus the GDP of the world, the coefficient, the beta is increasing at the time when nominal GDP is growing and when supply is having trouble. Okay, so this is a perfect storm for tin. Last time what saved the world was Myanmar. Okay, when in 2018, I would say sometime around that, Myanmar started to produce some tin, and they managed to rebalance slightly the equilibrium. But this time, I don't see where the new tin will come from. So it's a perfect storm. I think it's even a more perfect storm than for silver.
Yeah, I'd add one or two things to that. I think that was a great summary. So, one point is what increases demand? Well, in 2006, we stopped using lead for soldering. We started using tin because lead is obviously extremely bad for the environment. No one wants lead poisoning. It was started in the EU, and that spread throughout the world. So, with all the electronics, you have to connect them somehow. And while, tin is not a major component of electronics, it's a required component of electronics. And it's in everything because you have to solder every piece of electronics you'll see across the world with tin. The second issue, when you look into this, when you look at the supply question, like was just mentioned, the mining production has been very flat for a very, very long time, and actually decreasing too. But if you look at where the supply is coming from, 2/3 of the supply comes from 3 countries: China, Indonesia, and Myanmar, right? So China's tin district, if you go and look it up online, is completely collapsed. There's articles about how they've been trying to get something out of it, and there's just no more production coming out of it. And we also know China's trying to block metals exports. We talk about Indonesia, onshore exploration in Indonesia. That tin market has also collapsed. If you look at the state entity there, tin production is dropping. They've actually started producing offshore in artisanal mines, which are, you see pictures of those I put in my article. It's disgusting. It's terrible. And, the president of Indonesia, he basically said, look, all these artisanal mines are selling into the market. The state is not receiving the revenue from this, and we're shutting them down because we can't produce enough tin anymore, and we want to maximize our profit. So that's causing a supply issue. And then we talked about Myanmar. I mean, that's under a military dictatorship. And then you look at where all the remaining countries are. You have the DRC. Everyone always talks about Alphamin. I mean, it's a great investment as long as the rebels don't take over your location. And
or the government.
And you look at where tin can be supplied from. There's little to no in North America. There's very little in Europe, right? And you look at the supply chain, it's tied up in countries that have ulterior motives or wars or just about anything else you can think of going on. And you look at the projects that are in countries that are friendly to Europe and North America, there aren't that many besides First Tin.
Yeah. No, I think that's an interesting kind of way to look at some of these different things, because it sounds like it's been decades in the making as far as like the current supply and demand setup. And I guess the last piece on that I want to kind of ask is for like where you see the tin market going over the next 2, 3, even 5 years, right? What kind of price would be needed to incentivize like significant exploration, production, right? The whole process to bring new mines online outside of projects like First Tin that are somewhat advanced as far as kind of what stage they're in?
Yeah, it's a very good question. I think, I'm going to throw a few arguments on the table, and then it's up to everyone to make their own conclusion. Number one is tin is nicknamed the spice metal. Okay, why? Because tin, as Sara highlighted, tin is used in many domains, many uses, but it's always tiny. So if you take a cell phone, for instance, there is, let's say, $1 of tin. Okay, will Apple stop producing iPhones because the price of the tin in the iPhone moved from 1 to 2, 1 to 3, 1 to 4, 1 to 5? I think there's no limit. And as Sara said, today, if you don't want to use a tin for solder, well, you have to use silver. I think,
which is a little more expensive.
Yeah, which is a lot more expensive. In other uses, there's no substitute. Okay, tin can. We've been looking for 200 years to replace tin cans. They're still here, and there's nothing else. There's no substitute. And if you look at PVC, for instance, the first PVC, they couldn't stand UV from the sunlight, so they had to put tin in it. And now you can have garden furniture and so forth, and they're stable in the sun. But if you stop using tin in the PVC, as soon as there is some sun, it will start waving. So no substitute. So I don't see any substitute anywhere for majority of the uses. If you look at silver, for instance, silver at from I think $135, you can start maybe in solar panel to use some copper and so forth. But for tin, I don't see any substitute. I don't see any a new mine opening apart from the one of First Tin. Even if you were to give me $1 billion today, and say, just find me some tin. You'll be my Stalin. Go. I'll give you $1 billion and you open mines for me. I couldn't. I could obviously speed up Taronga, and we can get probably in 1 year production, maybe. Tellerhäuser in Germany, well, it's going to take 2 to 3 years at least. I cannot come up tomorrow with a turnkey project. I mean, in copper, you have turnkey project. In silver, you're probably not far away from turnkey project, but not in the tin space. So what is going to happen? I think we're going to see a lot more artisanal mining. So you will see kids in Burundi, in Congo, instead of going to school, they will go mine for tin. You will see more illegal mining in Indonesia, maybe some Thai on their beaches. They will try to get some of the tin because there's tin in Thailand, but Thailand unlike Indonesia, refuse to destroy their beaches to produce tin. So there will be some marginal production, but nothing that can meet the demand. So what can happen? We have only like 2 or 3 historical parallels, but for me, we could have a massive spike. I'm not saying one will take place. What I'm saying is that all the conditions are there for between now and end of 27 to have a massive spike.
And I mean, the key is you don't need a massive spike because the metals has already returned. If you look at its performance since 2002, I mean, you would have been better off buying tin than silver. It's gone up 800% in value since 2002. And the reality is, you look at the projects we're investing in with First Tin, they don't need the current tin price. I mean, if the tin price goes higher, great. But, their all-in sustaining costs, which we'll get into later, is half of it.
Yeah. Well, I think that's the perfect segue to get into a little bit of the background on First Tin. And maybe, Sara, you could lead us off with that since you did the write-up on the company. And, like, one of the things that I was looking at is like, okay, right, you have the jurisdiction, and a lot of investors, especially in mining, are focused on, hey, where is the project? That's very important, right? So maybe if you could give us a little bit background on First Tin, right, and why it's pretty compelling despite some of the complexities of financing and permitting and all that stuff.
Yeah, absolutely. So yeah, as a mining investor, I always look at jurisdiction first. Actually, I don't really care about the deposit because if it's in a bad jurisdiction, then the risk reward on that investment needs to be like very, very large, right? Because I don't trust companies not to get nationalized or their contracts to get renegotiated. That's not to say you can't make a bunch of money investing in Africa in mining companies. Everybody does it. There's lots of great resources there. You can make ridiculous returns, but there's the commiserate risk associated with it, right? In the case of First Tin, its main assets are in Germany. As we just discussed, that one's a little bit further out. It's also polymetallic. It's underground. It's going to be a little bit more complicated to get going. Their asset in Australia, which is what interested me, is, very close to being fully permitted. It's going to be very simple to construct. It's going to be very simple to mine. It's going to be very simple to separate. I mean, it's an ideal mining project from that standpoint. And so when I started looking at First Tin, I was like, okay, question 1, who's in this? Because, I'm not a mining geologist. That's the wrong type of geology. I know all the words, but, you asked me to apply them in an intelligent way. I might make myself look pretty stupid quickly. But, I saw Metals X was an investor, and I was like, oh my God, Metals X, they're the big boys of tin, and they own 30% in this microcap. I was like, okay, something is going on here that I need to further understand, right? And so I started digging in. I started looking at, the questions around Taronga, which is the main project coming online soon, and the focus kind of our discussion here in a little bit. And I was like, what is everyone's statements about this mine? Why is the stock price of this company so poor? Because obviously it hasn't done a whole lot in a long time. And, it came down to a few things. One was, I think the company doesn't have a lot of publicity. I think the tin market is not understood. And then, there was this big outstanding question of, they have this quote unquote low grade deposit, which was the real knock that everyone kept saying on it. And, and I started investigating this, pretty carefully. And, I started researching, I started reading papers, and then the first thing I found was that the CEO of Metals X gave a hour-long podcast on tin. And they asked him about First Tin. I said, why did you invest in First Tin? Isn't their deposit questionable? Is it weak? He's like, well, that was my first thought also until I did the work. And then I realized, actually, this is a really great deposit. It's simple to mine. It's on the surface of the earth. The strip ratio, which means how much you have to take off to get to the resource, is the lowest possible you can have in a mine. The type of rock you're mining is cassiterite, which is tin oxide. So it's basically pure tin. And the permitting's almost done. And by the way, this mine sits in a potential tin district. So once this thing is up and running, they could have 5, 6, 7 more discoveries after that, because the tin market has been so unexplored. You need a mothership in an area. Once you set up the mothership, you can go, anywhere. And so that was my thesis around this company that got me really interested.
Yeah, a little bit of a hub and spoke model for the assets. And we were talking a little bit about this before we fired it up. But Albert, I know you kind of have communications and a relationship with the existing management team. I think it'd be interesting to hear your thoughts on Taronga specifically and the kind of potential for expanding that resource after like the primary asset has started to produce.
Yes, sure. I think Sara described it very, very well. Just for non-specialists, Taronga basically is a hill, and we're going to take off the hill because the tin is in the hill. Okay, so it couldn't be simpler. It's not like there's not something complicated to build to access the cassiterite. It's just like a hill, and we're going to take it off. So it's very simple mining. Second, because the first risk one of the many risks when we invest in mining is constructing the mine, right? In this case, there's almost nothing to construct, right? There's nothing underground. And second of all, which is very interesting, is the mineralogy is so simple that unlike most of the mines, we don't need to develop an ad hoc, customized processing plant. It's going to be off the shelf, okay? So it's going to be cheap and simple. And you don't run the risk that you've built a very complex processing plant and it doesn't work. It happens often in mining, okay? In this case, you don't run that risk. And that deposit sits in a historical tin district. So I think it's very unlikely. And to this morning, the company published an RNS about the drilling campaign results. And they confirm that we have more tin than we thought. And the drilling campaign was, the results were better than expected. More tin, higher grade, confirmation that there are potentially more tin deposits. So I'm very bullish on the geology. I'm very bullish on the mineralogy. I'm very bullish on the area. It could become very meaningful tin producer. I mean, we are in the early innings of that project.
Yeah, I think the logical follow-up question there is, what does the CapEx look like for going from where we are today to, hey, we built the project and now it's just starting to produce? Like, what does the spend look like there?
Yeah, I mean, from what I've read, and correct me if I'm wrong, it's generally in the 150 to 180 million Australian dollar range,
Yeah.
which is not very expensive. Australian dollars are a lot less than US dollars. And, this brings up a valuable point, we have to talk about is how do they finance that? Obviously, they're in the micro cap space. And for better or for worse, you can take it for what it is, but Australia and the US signed a critical minerals treaty a few weeks ago where they said they were going to invest in Australian companies that have critical minerals. And so there's a framework that has been put in place to basically provide investment dollars to Australian mining companies. And shortly after that, First Tin announced they were working on an EXIM loan. Now, will that EXIM loan require additional equity of some sort? Probably. Will it be a huge amount of equity? No, because typically EXIM loans finance the vast majority of a project. So like if you're looking at in terms of dilution risk, your last real risk of dilution, which maybe I'm going to hang myself by saying this, so forgive me if I'm wrong, because I hate saying stuff like this. I think the last risk of dilution here is that, they go ahead with the EXIM loan and they need to put up some more equity dollars. I think the project will be permitted at that point. I think it'll be ready for development. And, we may not even get to that point because Metals X may just try to buy the mine before they receive the loan.
Yes.
That's not my baseline investment case. I think this company is worth 5 times what it currently is. I have not sold a share since I purchased it. Even if it's going to be up 150% from where I bought it at, I'm not selling it. I'm here for seeing how this plays out until it gets into production.
Yeah, I think you raised an interesting point there with dilution, and that was kind of my first hesitation when I was looking at this was, okay, if you look at the shares outstanding over the last 2 or 3 years, I think that would make a lot of investors nervous. But maybe, Albert, you could weigh in on kind of the dilution topic and the recent equity raise and kind of follow up on Sarah's points there.
Yes, I think a capital raise, dilution is 2 sides, right? One side is one that you see directly, which is I own less than I used to. But you get to look at the result of how the money is spent, right? Because if the money is spent to pay marketing trips for the CEO to go all over the world in first class and meet investors, then obviously you're really diluted. I think First In, and trust me, like the chairman is very strong, and the money that they've raised is money that has been put to use and has created value for the company. So as a shareholder, obviously, I'm not happy with dilution, but I think the money has been very well spent. First In is in the strongest situation it's ever been, and it's the result of the money that has been raised. Now we have the result of the drilling campaign that will enable to increase the reserves, so increase the NPV of the mining project. So overall, obviously I would have liked all of that to happen for free, but it's got a little bit of a cost, and that was the dilution. So going forward, do I fear more dilution? I think I agree with Sara. I think we've seen the worst. I think the next raise will be to build the mine. And if the mine is built, I mean, it will create a strong re-rating of the company. So from here, and again, I'm like Sara, I'm very worried to say that, but it looks like we've seen the bottom, and the way next is a way up. If we have a higher NPV, tin price. As Sara said before, we don't need the tin price to go much higher than this, and everything above this is gravy. I think, if I'm not mistaken, every $1,000 of increase in the tin price is 25 million Aussie dollar increase in the NPV of the project. So if we have a higher tin price, it's just like it's like gravy. The drilling campaign have confirmed that we have more tin, that the life of the mine will be longer. All of that. I mean, I couldn't be happier. I'm just surprised that markets have not reacted to it. I understand people want to own Alphamin, it's more liquid and so forth, but I think the main reason why First Tin is not liquid is because lots of insiders like Sara and I were not seller. And I think 85% are what I call insiders, which are not in the sense of SEC, but in the sense of they've understood the story and they're not close to selling anytime soon. It's probably over 85 to 90% of the on the shareholder register who are like, I know that story, tin price will go higher, NPV will be higher. If we're not acquired, then we will build a mine, there will be a re-rating. So 95% chances that I'm going to make lots of money on this investment. And so that's maybe the reason people see there's not enough liquidity, they don't want to buy. But I think it's a wrong analysis. There's not enough liquidity because there's not enough seller. And as soon as a buyer come in, you can see the stock price re-rate very quickly. I'm not selling either at this price. I mean, it would be crazy to sell here.
Yeah, I think the thing on dilution that is interesting, I guess, is kind of the perfect kind of follow-up to that. That'll have an impact on a future equity raises. But what is the kind of timeline to permitting and financing and the path to building look like, right? Because if it gets dragged on and delayed and gets kicked out another year, whatever it may be, right? That's probably another round of dilution. But if we can say, we don't know an exact date, but if the permit's going to show up in the next couple quarters, and then you're going to have the financing come in sometime behind that, right? That probably is means you're kind of well on your way to a re-rate, and any equity raise would be at a probably much better price than where it's trading today. So what does kind of the timeline look like, and how's that set up for potentially avoiding any more dilution bombs?
Well, obviously we are in the hands of the Australian regulator at the moment. So will they issue the permit this quarter, next quarter? It's, nobody knows. Will it be in H1 of 26? I strongly believe so, but you never know with civil servants. Technically speaking, I think once we have the permit, maybe we can squeeze it to 18 months to get into production. 2 years. So when I last spoke to the CEO, he was still hoping end of 27, early 28 to start production. So the capital raise would take place in a few months. But I don't see why the stock would not re-rate once the permit is issued. Because once the permit is issued, and once we have the financing from Exim or from another provider, I mean, when your cost is under 20,000 and the raw material trades at 45,000, I mean, there's very little risk for the lender. So I think I'm very optimistic about the companies finding the money to finance the debt side. So I think we're maybe 6 months to 12 months from another equity raise that will lead to the building of the mine. And I think it would create massive value for shareholders. And I will participate in the next round for sure, if there is when it comes.
Do you have anything to add on that timeline, Sara?
Yeah, I mean, when I underwrote this investment, my philosophy was I'm really not going to pay attention to this security until the end of 2026. Because by that point, there had been plenty of time to get the permit. And once they have the permit, then they have time to get the financing in place, or at least get very, very close to finalizing the financing. So in my view, like the end of 26 is kind of the deadline to get financing in place and permitting, and then mine production sometime in 2028, hopefully early.
Yeah, and one of the things that has kind of been mentioned a little bit is that Metals X is the largest shareholder, and there's some possibility that First 10 would be in play after they hit certain, basically, mileposts as far as progress. What is kind of your guys' view on when Metals X might make an offer for the company or potentially look to take out First 10 and develop Taronga on their own?
Well, I'm not. How can I say? I'm not an acquaintance of the CEO of Metals X or of the directors, so I speak with what I imagine. If I was in the shoes of the CEO of Metals X, I would wait for the permit to be issued because I wouldn't want to take this risk. I would be happier to pay more than to take the risk of the permit, even though in my view the risk is extremely low. But with government organization, you never know, right? Can always be something. And then I would rush to do it before Exim comes with a term sheet, because if Exim comes with a term sheet, I think the price will be higher. So I think if Metals X move to acquire First 10, it's going to be in the second half of this year, or after the permit is issued. But again, that's what I imagine. I have no information.
Yeah, I would agree with that. I mean, they're exposed either way to the upside. They own 30% of the company. I'm sure if they had a choice, they would own 100% of the company right now, but the management has been very clear that they're not going to give them more than 30% because they don't want them to have a blocking stake. And that's my view. I mean, they're a strategic investor. They're a potential buyer of the asset. They're very familiar with it. You know, are they ultimately going to buy it? I mean, that's up to them. I mean, I think either way, they want the asset to be successful.
Yeah, the 29.9% is also a restriction imposed by the London Stock Exchange. So if they wanted to buy more, they would be forced to bid for the whole company, and they would fail because, as I said, a big chunk of the shareholders, excluding Metals X, are long-term investors, people who have known the company for a while, people who know the story very well, and those guys would not sell on the cheap.
As far as like moving to some of the other assets the company has, we've spent a lot of time focused on Taronga because that's what investors want to see. That's the main focus over the next 12 months. But what should investors look for and pay attention to with the company's other assets?
Yeah, so in terms of the German assets, you know, like I previously mentioned, they're a lot more complicated because one, they're in Germany, so obviously German law is very German. It's going to be underground development. It's polymetallic, which is a good thing and a bad thing. If you're just interested in tin, it's a bad thing. If you're interested in lots of other critical and rare earth metals, it's a good thing. But obviously having to separate a polymetallic deposit is a little bit more complicated than the stuff in Australia, which is basically the purest form of tin you can get, right?
Yeah.
So I think in terms of like the German deposit, which is one of the largest deposits in Europe of tin, and it has all these other great metals, I mean, they need to finish the permitting. I think a critical step for that asset is they need to get the German government on board to help finance them directly or get stakes from German companies, like a JV partner. I mean, that mine would provide critical metals to German industries. Germany has a lot of manufacturing going on there, and they, like the US, have some concerns that, you know, you could wake up tomorrow, especially in today's geopolitical environment, and China can say, hey, you know, we make whatever, 40% of the tin, we're not giving it to you anymore. Oh, what about You want titanium? No, sorry. And so, there is this backdrop of resource nationalism, which, for better or worse, is occurring, and is the reason why mining has been the best investment of anything in the last year. Mining has not been a good investment for many years before that.
True.
Right. But the last year, if you were investing in mining, it was very difficult to lose money. You'd have to try.
Mhm.
But that's my thought on it.
Yes, and China is a competitor of Germany in terms of industrial policies, EV cars, electronics, and so forth. And most people are not familiar with it, but there is the equivalent of the Silicon Valley of Europe is in Saxony, so very close to where Tellerhauser is, and companies there, they need germanium, they need gallium, and at the moment they get their germanium and their gallium from China, and in the deposit we have germanium and gallium as well, so there is a value there, and Europe is more and more focused on defense. Defense requires tin, we have tin, so I think strategically speaking, at one point in time, I don't know when it's going to be, but at one point in time, either the defense industry or the European Union or somebody will have to step in and say, well, we cannot depend on China for defense. We cannot depend on our competitor to produce electronics. Let's get Tellerhauser working. And Tellerhauser is big. I mean, it's exactly the opposite of Taronga, because Taronga is open pit. It's very simple and so forth. In Germany, is a lot more complicated. It's underground, and it's polymetallic. So the processing plant will be a lot more complex. But it's big. It's very big.
And it looks like, from what I was seeing, the grades are better, at least as far as what people will see kind of as the first look through. So they're not going to be moaning and groaning about like low grade and open pit resource at Taronga in the same way for the German assets. But
and one thing you've got to know as well about this is this deposit was actually discovered by the Russians when they were occupying Germany. And they spent the equivalent of, in today's euro, it would be 250 million of drilling. So we have amazing drill results from the Soviet era. So it's got value. It's got value. It's not priced by the market. Maybe a slight disagreement that I would have with you, Sara. Sorry.
Okay.
I think mining in Germany is not as complicated as you said. It's you've got to play by the rule. I mean, it's a country where you play by the rule. But mining in Germany, contrary to other European countries like France, for instance, Germany is not opposed to mining. And Saxony, because Germany is a federal state, the wealth of Saxony, one of the sources is mining, and their history of mining. At the time of the Soviet, there were uranium mines, for instance, in Germany, and the nuclear power station of the Soviet Union were powered with uranium from Germany. So there's a very, very long history of mining in Germany. And another historical fact, it's the city of Freiburg was renamed because there was somebody who was so rich that he in the Middle Age, he managed to basically own the city. And there was a lot of silver. And he said, anybody who comes to work in the silver mines will be free as long as he pays me 10 or 20% of what he finds. And apparently he was the richest man in Europe in the Middle Age. So there's
that's a pretty good royalty arrangement. So.
yes. We have new names, but we don't have new business models.
Yeah. It's a pretty interesting story, but I guess the question I have about the German assets is like, what is the strategy and timeline look for those assets as far as permitting, financing, and maybe could there be other other potential transactions, whether it's a spin out or other ways to kind of get people to realize, hey, it's not just a Taronga story of permitting and financing. There's other stuff going on here. So what does the strategy and timeline look like for those? And could we see some other form of transactions to kind of realize value for investors?
I think as a European and based in Europe, I think it would make sense for Europe to create a tin champion. We have some tin in Spain, in Portugal, in Germany. I think it would make some sense to put all those assets in production and have a European tin champion. Will it happen? I don't know. Will it come from the European Union? Will it come from private investors? I don't know. But one way or another, tin is at 45,000. This asset will print cash. So this asset will go in production. How the management will get there, I don't know. I think opportunities will come along the way. But it's a good asset. We know it because, as I said, more or less 250 million of drilling have taken place there. It's the only non-mine in the world where there is a tunnel and you can go and see the ore body. I went there. So it's very unique because the Russian that constructed a tunnel to go and see the ore body. So I think it will get built. I don't know when. I don't know by whom, but hopefully it's going to be first in. Hopefully there will going to be a European Exim or something like that, or even Exim will finance it. I don't know. Yeah, the company has never disclosed any major plan apart from getting the final permit.
Yeah, I think that's the focus for them. Because, I mean, honestly, they're a small business, and if they try to do everything at once, they'll get nothing accomplished. So, like, for me personally, the focus is for them to get this Australian project going.
Yeah.
And then once that's, financed, at that point, it's time to, keep Germany moving forward with the permitting, because the cost of permitting is not huge, but it's a necessary first step to get anyone to give you any money. And once they get that permit, then, if it was my choice and I was running this company, I would bring in a partner to handle the German side of this, and I would focus on the Australian as an operated and let the German one be a non-operated with a large European conglomerate, which would pay them a lot of money and carry them for the cost, ideally.
Yes, you can look at many ways. Like another option is to wait for Taronga to be in production. Is with a couple of months of cash flow, you can fund a full DFS on the asset. I think you get to look at it like a rough diamond, and how is it going to be polished by whom, when? It's very difficult to say, but it's definitely priced at zero in the stock price at the moment. It's definitely worth a lot more than zero.
Yeah. And as far as you kind of mentioned feasibility study there for the German assets, what does that look like for Taronga? Sounds like that is still in the works for what investors should look out for there. What's kind of your guesses on the timeline for that?
No, in Australia, we have a full DFS. What we're doing is that because we have more drilling campaign, we're
going to be updating.
Yeah, we need to update it because we want to extend the mine life, and we want to turn some of the resources into reserves. So that's why when we spoke about dilution, I said there's a good side to it, because when you turn resources into reserves and when you extend the mine life, I mean, the NPV of the project is there's a multiplicator effect on the NPV of the project.
Mm.
Yeah, it'll be interesting to see what the new DFS looks like.
Yes.
The one that I looked at was from May 2024. Tin prices were less. There were a lot less holes in the ground, right? So I'm expecting once this new DFS comes out, we'll have something that looks even more solid than before, which will be important for the financing.
Yeah, so I guess. Oh, go ahead.
No, I think I would like to highlight. I think the quality of the management team is not the typical quality of a junior mine. It's or a junior explorer. We have like very senior professionals, experience. Tony Trulove, for instance, the geologist, he was in the last tin bull market before the International Tin Council blew up. Our CEO, Bill, is a very experienced person, has been CEO of several mining operations of a higher scale. The chairman, the board is extremely experienced, very knowledgeable about tin. I think it's very strong corporate governance. I think it ticks all the boxes. I'm very excited by it. That's why I'm on this call. I'd like to share my enthusiasm.
Yeah, so I guess the logical place to wrap up is, like, we've talked about the different projects, kind of timelines, all this other stuff. The logical place I think to wrap up with is, like, what do you guys think it's worth, right? And that's where I think it's pretty interesting if you start doing the math. But again, like, the risk there, as far as I'm concerned, the main risk is that, like, the timeline drags, and that leads to more dilution, especially at these prices, right? Dilution is something that's a little bit easier to stomach if the stock is double or triple what it's trading at right now. But what is kind of the upside to fair value, if you had to guess? And obviously not advice for anyone listening, but it's just kind of a good way to look at where it's valued today and where you guys think it might be valued as it hits certain permitting and financing, basically goalposts.
You want to take a stab at that first? Because I'm curious what your numbers are. I got mine.
Well, I think it's very difficult to say. There are so many possible paths. But I think, to me, I don't see. I prefer to look at it like not worst case, but like between worst case and base case. I think this it should be trading at least at 25-30p. You know, it's already today, and so when we get the permit, when we get the new DFS, and I mean, you can compute the numbers yourself. I mean, tin is at 45; it's no longer at 30. The mine life would probably be extended. The drilling campaign was good, so the resources will be probably turned into reserves. So you can use optimistic or pessimistic assumptions on this, and you can get from 25 to 40, 50p, and if we build, get Exim financing, go into production, it can go even higher than that. Again, don't take this as an investment advice, but these are my assumptions.
I'll say this: I don't invest in junior mining companies unless I can see a greater than 5x return, because it's not worth the brain damage for me.
Yeah, I think the thing that got me interested is when you look at Taronga and try and figure out, okay, what is this worth relative to kind of the current market cap? What do you think it's going? It's like, can you see a pretty quick re-rate if you get like some momentum as far as permitting, financing, all that stuff? Like, I think it more than pays for like what you're getting currently at the current valuation. And excuse me. And the other assets in Germany, I think, are more like a longer dated call option on like the management team executing and seeing where it goes from there. But maybe if we can drill down a little bit, like, what is your guys' view on what just the Taronga project is worth? Because I think that's what investors looking at the name for the first time are going to be more focused on, because that's something that's more imminent and going to be coming, say, in the next 6 to 12 months than the German assets.
Well, in my assumptions, I didn't consider a value for Tellerhauser. So it's only based on Taronga.
I would say the best way to look that up is you can look at the 2024 DFS, which was with lower quality data. As of today, they announced they have higher quality data with more tin discoveries within the Taronga asset. If you look at that report at the current tin price, we're talking about a pre-tax NPV of 500 million Australian. And that's without, we talked about the hub and spoke model. That's the hub, at a very early stage, right? For all we know, they could drill deeper, find underground deposits. They're in a tin district. Who's to say there aren't other cassiterite projects that wouldn't make sense if you didn't have a plant in place, but now do, because you just have to truck it 5-10 miles down the road. So to me, like, the way I view this investment is I don't have a whole lot of downside. I have a whole lot of upside. You don't need to hodl it if you don't want to. That's just the way I am. I'm a special situations investor. I'm very comfortable losing all my money or making 10 times my money. That's the day of the week for me, right? It happens routinely. But, if you're someone getting into this security, like, there are going to be points in time that this project progresses where the value is just going to increase, assuming you believe that the tin market story is as we say it is.
Yes. And to complement what you said, Sara, because I think it was a very good summary, I would say if you have a good deposit, okay, and if you have a competent management team, and if you have a good corporate governance, I think you can close your eyes. They will generate value from it, especially when you buy it at such a cheap price. So that's the way I look at it in my mind. I mean, it's cheap. It's a great asset with a lot of potential, lots of options, like other deposits at Taronga, Germany that could, there's a lot of potential there. You have a fantastic management team, a great CEO, great geologist, great team in Germany too. You have a fantastic board. Now you have 2 directors of Metals X, which are amongst the most knowledgeable people in the tin space. I mean, your downside risk is low. I mean, especially because you buy it cheap and you have all that quality that is waiting to create value for you. So that's how I look at it. I don't see much downside in the situation.
Yeah, so I think we kind of covered most of the stuff that I was hoping to get into. Again, none of this is advice. If you do go buy it, what I will say is it's not very liquid. So use your limit orders and be smart about how much you're going to go and put into it. But I think it's very compelling at kind of current valuations. And I guess before you wrap up, I do want to get a kind of like closing thoughts, or like, is there anything that we skipped over that I missed that we should kind of touch on before we start to wrap up?
I would only just say, we talked a lot about First Tin, why we think it's a very good tin investment. I think if you're interested in the space, you just need to get yourself comfortable with the tin story, do the work, and once you believe in the story of tin and the lack of production that is going to be occurring, in the crunch that's going to be occurring over the next 3 or 4 years, everything kind of comes after that.
Yeah, I agree with you, Sara. That's really the way to tackle the problem. Is first you look at this tin situation. If like Sara and me, you get to the conclusion that the problem will be very difficult to fix, then you look at how you can play this, and First Tin is probably the best risk return profile out there.
Yeah, well, I think the thing, just to sum it up on my end, the thing that I find kind of most interesting is that it's going to get a lot simpler over the next call it 6 months, but in 2026, if they execute, where if you get the permitting and financing, then I think people buying today are going to be pretty happy with that decision. And if you don't get some material advancement, you get more dilution, then it's kind of like, okay, then you have to reevaluate it in the next 12 months and see where that leaves us. But I think the setup is very compelling. And my guess with the focus on resource nationalism, critical minerals, all the stuff that we've kind of talked about, that you're going to see projects like this be kind of priority versus just doing greenfield exploration and starting from scratch. So I don't know if that opens up any other comments, but I figured I would throw in my 2 cents here at the end.
I think that summarizes it really well. And that's the reason why we have suddenly an Australian-U.S. critical mineral treaty that just appeared out of nowhere.
Yeah,
exactly.
Well, I think. Go ahead.
Thank you. I mean, it was very good. I mean, it was very, very. Thank you, Ben, and thank you, Sara.
No, thank you. Thank you both. I enjoyed it. This was my first podcast and it was painless. So thank you for inviting me.
Well, I try to make it easy and straightforward. And one of the things I've noticed for talking about investments, if you're interested in a topic or just talking about something you enjoy doing, it like you don't even notice it's recording a podcast. It's just you get into a conversation, you kind of lose track of time. So hopefully that we'll have something else to talk about here in the next 6 to 12 months with First 10, but we'll kind of see where it goes. I'm definitely excited to see what people think of the podcast, and I really do appreciate you guys taking the time and coming on. And I'll obviously put the link to your write-up, Sara, in the description so people can go check that out if you're interested. One of the better, more detailed write-ups will give you some background on kind of the tin supply and demand, all that stuff. But I think with that, we'll be wrapping up. Thanks for stopping by, and we'll see you next time.